So it is technically on the East Coast, Tuesday morning. We are 15 minutes from London Open. We are looking at the NASDAQ futures NQ on the algo that I use to execute my trades. Let me just get rid of some of these extra lines here. The algo, if anyone's new, is a variation on the trade and perform algo, which looks like this. I've taken this and changed some of the colors, added some more lines and signals to help me. Well, basically, the algo interprets the footprint, so I don't have to, right? I have other screens that have relatively clean charts for analysis and location. So I do use candlesticks, right? But I'm a day trader and I do a lot of mean reversion trading. So the candlesticks will tell me on the higher time frames who's in control, where the levels are that I want to be interacting with and observing. But it won't necessarily help me with timing. For instance, I can know currently that in NQ, based on just this pattern, that we had support here that was a consolidation between two voodoo range levels, which is really normal. Just the way the algos work. Not my algo, like the mean reversion algos that basically run the market, especially overnight like this when humans aren't really involved. We get a big capitulation below, turns into excess when we can consolidate inside the area that this week is now considered one voodoo range. It then expands. You can see that it gets stuck up here, traps more traders, can't go any higher, consolidates inside of a voodoo range, does it again, and then pukes, right? So that should be pretty clear from this. You won't see that on the algo, right? That's not what the algo's for. So then that was Friday. Today, Sunday, not today, Sunday, we opened lower than the low on Friday, which is pretty bearish, right? And not surprisingly, we couldn't get below this low, and so we filled the gap. That's what happened Sunday. Monday, open drive higher. Yeah. No, I don't remember. Open drive lower. Okay, it was pre-market that we drove higher. That's right. So pre-market drove higher, squeezed out all the shorts, then they rolled it over at open. Bonds were closed for Columbus Day, so this was kind of a weird day. It was actually not too bad for mean reversion traders who are good at trading choppy bounce. The algo did fine, but there wasn't a lot of volatility, and the moves took a really long time to develop. And so, traders that like faster motion or anybody who trades trends got totally smashed if they trade on Monday. And traders who like fast markets just probably fell asleep. And so then we traded back. Here, let me go back to the 2 hour. We traded back below or lower, and then got lower than this previous support low. Now, keep in mind this low here happened in Globex, right? And then London low was here. Let me take off. So this one, on the other hand, traded during RTH, and that is relevant. Time of day matters, and what we end up getting when we get this, we got some news out of Germany, I think it was international news about. It doesn't matter, right? To be honest, it does not matter. They saved it basically. They got under it, gave it a stick save, and put in excess once again below that, meaning that we have more than just a couple ticks. It doesn't look like much because it's on the 2 hour chart. Notice that it couldn't even make it to the next voodoo range level, and they find buyers. What that usually means is that human traders made decisions there, and algos were forced to go in the opposite direction, even though they planned on getting it down here, according to my theories. I feel like the mean reversion algos generally trade level to level on purpose because they know that that's what to expect. And so when you see it approach it this close and then not do it, it's usually the start of a reversal. You'll see it, or else lower high like this, right? So the mean reversion algos that don't really adjust very well to whether or not it's trending or not, they just kind of are always on. They're high frequency. They just kind of like trigger if it's on order flow and levels. You can see that they shorted this, and then once this reversed, they bought this, and they were probably going to short this again, but you can see that human traders intervened because of NFP, and that's when you get right. So same thing here on the retrace, couldn't quite reach this this zone here that I identified as important, couldn't even reach the 11,300 level. Human traders were probably lined up in front of that level selling it, right? So they just never filled them all. And so those are important to watch. And then sometimes you get the exact opposite, where you actually trade beyond the level, and then the level doesn't hold, right? So what I call a test beyond but no close beyond. This is actually the this is actually the stronger of the two, but unfortunately it also happens very often during expanding negotiation when it's not trending. This one, when it's a lower high like this, pretty sure that's a lower high. Yeah. So this and this, those are almost always a sign that the market's actually going in that direction. So it's not 100% or anything, but it's more than 50. If you've got actual rotations here making a lower high and it can't reach that same voodoo range level that it did before or approached before. So this one, you could say it got close enough. This one made a lower high. That's bearish, right? And then the other side of that is you need it to establish. It's going to establish an actual level on the low. Let me find one. And then test below and fail to close below. See, if you're too zoomed in, you can say that this one did, and then it technically traded below and then went. But if you see, we're actually bearish here, and that's part of the problem. Let me see if I can find one here. It would have to test below that and then fail to close. Right, it didn't establish the level. This, right here, right. So established the level here, what I call activating the level here, meaning that we know for sure that there are. Sorry, my kitten is going crazy. It's just zoomies at night. He's fine. He's bored. The level was activated here when they pulled back, and we found algos waiting in line to buy it, and then they got underneath it. They probably sold underneath the level, and then human traders turn it around, and the result of that is going to be at least one, if not 3 or 4 voodoo ranges higher. So this pattern here, where it activates the level, trades underneath it, and then zooms higher. This right here is a really, really nice. It's really frustrating if you miss it, right? Because it does not retrace. Is what I'm trying to say. It's impulsive, right? This low will eventually get tested usually, but because there is excess below the place where algos got activated here, they get trapped, and so they stop selling the voodoo range levels until you get one of these where they test above but don't close above. And you can see that's exactly what happened here, right? But this level was not previously activated, so we didn't get an immediate impulse move down. It took a while. It had to consolidate. When it's activated, meaning it got touched, like this one's close enough, right? Because these levels aren't exactly the same as they were at that time, but assuming that the levels were right around here, when you get tested above there and then close below after just recently testing it like that, that's going to be a relatively immediate drop. You're not probably going to take that high. Very unlikely that you'd get above that high anytime soon. Will you eventually trade above it? Sure, right? Like you can, the market can come back. Oh, nice. There's 5 minutes before London open, and they're already trying to take out this level. So what I was saying is that it was activated here. We got underneath it, right, during the regular trading hours, and the bids just started coming in, right? So they stick saved this level, but you can see that this one, they weren't able to overtake this high, and so the result was balance. That balance is likely to be expanding, and I'm not going to go into why. You can watch my video about like the hints of that, but this It has to do with how we're trading versus the other voodoo range levels around it. And this kind of pattern is not usually consolidation. If it is balance, it's usually expanding balance, which is usually pretty hard for people to trade unless you have a system for it. You can't trade momentum. You can't buy dips. You can't just sell every rip. You can't sell a lower high. You can't buy a higher low, and you can't put your stop below the higher low or the lower high. I mean, you can. It'll just get eaten, right? So unless you're really quick. So either we're going to take out this low and find sellers and expand. That makes sense, right? Or we're going to take out this low, expand lower, and then find buyers. I know that's kind of like copping out, like, okay, you're saying it's going to go up or down. That doesn't really tell us anything, but it actually does, because what it's not going to do is it's not just going to stay inside of this range anymore. It's actually going to increase in range. And that's really important for me as a mean reversion trader. It may not be that important for you if you're a momentum trader, because it does not tell us about the direction of the market. And the truth of the matter is, you don't need to know where the market's going to close at the end of the day, or like whether or not the high of the day is going to get taken, or whether or not the low of the day is safe. These things actually don't matter for your day trading. They do matter if you're a swing trader, but you can make plenty of money in both directions, even when the market is going down. So realize that, like, if I ever say something that sounds like a cop out, like that, like, well, we're either going to break this and then go lower, or else we're going to bounce and then go higher. I'm not trying to say that I'm not trying to say that I'm going to be right in either case, right? I'm actually not making a call about direction. It's exactly the opposite of trying to say that, like, I think the market is going lower. I think it's bearish, right? So to be very clear, like, it's bearish until proven wrong. But if the bulls are going to hold, what they need to do is put excess in like this and then not trade through it. Once you renegotiate this, and it's close enough now that it's been renegotiated, you're going to get at least expansion. And that expansion very rarely turns into an immediate V, because without putting in more excess, right? So in other words, it's better for bulls not to have a poor high here, and to instead get through it and then spike back in, just like they did with this candle. That candle looked bullish, right, on a very small time frame. If you like zoom in here, this is an impulse move on a very small time frame after trading below the low of the previous day as well as the previous support, right? So this is just a mini squeeze. It's not a sign that the high is going to get taken out. Right? Is it bullish on the smallest time frame, and is it buyable as a day trader? Yes, absolutely it is. Right? You can just buy right there and put your stop down here, and if you can take that much heat, which I can't, but if you could, or if you have a better place to put your risk at, you can trade it back up to where? Probably the next voodoo range level. But if they defend that voodoo range level like this, see how it's defense, 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 they can't hold it. Guess what? It's probably going lower. Right? They try, they can't even get to it. They actually give it another try, they make another lower high, and this is not going to be consolidation. This is going to be expansion. See that? You're going to expand under it, reject, reject, and expand. But keep in mind, if I had a high odds trade with good risk reward to take some of these pullbacks, I mean, these pullbacks were 40-point pullbacks, 50-point pullbacks. They took like an hour. So, and it was choppy as fuck. So they're probably not great choices for trades. But do they set up sometimes? Yeah. Now the beeping means that we're expanding beyond. That's my algo telling me, like, watch the damn chart. You're getting some fun moves. Like look for trades, right? And the reason is because we just had London open. So let's go to now that we traded below low, and we'll peek at the candlestick chart some more later if it becomes relevant. But notice that the dashed purple lines, now it's gone, but right here, these are the voodoo range lines. So you can see that we traded below it. They put in the blue diamonds here, as well as the purple diamonds underneath, are saying that we've got exceptional volume on that bar, right? It does not identify whether or not the actual volume was aggressively bullish or bearish, whether or not it was done on the bid or the ask. There's other, if it's if it is exceptional, there are other signals for that. But all it's telling me is that there's a lot of trades going on in this period, and of course that period happened to close bullish, right? We traded at this level before we traded at whatever level it was going to close at the low of that potential Renko bar, and you can see where that's going to be with the range predictor. So if this current bar closes bullish, it'll close at 879.25. If it closes bearish, it'll close at 10.861, and it's whichever one is hit first. So here it's probably going to hit 61. It's actually above the voodoo range level, so it's most likely going to get hit pretty easily. There we go. So see, now that bar closes and they start a new one, and now you've got a new level, 73, and then this one's hard to see, but 54.75. So if either one of those, either one of them will get hit, and whichever one gets hit first, that prints the bar, right? Only when the bar prints, or when the price meets one of these levels, can I trust that these triggers, these signals, like the triangles and the stars and the colors. That's the only time when I can trust them to never go away. When it's a live bar, these don't actually mean what they look like they mean. They are a warning, an early warning sign that if the bar closes in that direction, that the conditions for that signal have already been met, right? It doesn't mean it'll be there when it closes, though, because the situation could change based on the trading inside of it. So you'll see that it disappeared and the bar turned green from white, and that's because the conditions for that green bar require that the bar closed green. So our closed bullish. So that's why you really can't trust the signals until the bar closes. What you'll see is once the bar closes, this never goes away. The one thing that does change after the bar closes is you'll see these little flags develop at the pivots. It takes 2 or 3 bars depending on how far you move or how fast you move. But we don't use them to enter on the bar because they don't show up right away. But you can see this one showed up within 2 bars, and now pretty soon you'll see one probably show up below here after this bar closes, assuming it's bullish. And what it basically will tell me is that this low is significant as a pivot. In fact, it'll base it on where it's going to close on the low. It'll show up either way. So you'll see one of these show up down here, and it will draw a green line. You won't see that so well because it's the low of the day. And that low now is a location that I can watch for a potential long trade if I'm interested in getting long. Just like this one prints a red line for potential entries to look for if I'm getting short. So it's just identifying location. So there it is. See the flag, the little sideways triangle shows up, and you can't see the green line because there's an orange line on top of it that says it's the low of the session. But there's a green line there, just like find another one, just like this, and just like this, and just like this, and that will stay there until we break it, right? And that's just telling me if I am bullish, that if we trade down there and we immediately come back in, which we call trap back in, that there's a potential trade there that I might want to consider if I'm bullish. It does not work if you're bearish. You don't buy markets that you're bearish on at the moment, right? So, yeah, London opened right here as we dropped. One new thing I can do is mark off these purple background bars because we should expect sellers to campaign there. In other words, to defend the level, especially after we get dual. This bar has 2 different algos on it, and both of them are signaling aggression. I'm not going to go into every single algo signal right now. You can watch my other videos if you're curious about what they all mean. If they're relevant to a trade, I will let you know and when we analyze it. But the important thing to realize is that some of them signal an aggressive action or pivot or change, basically, in order flow. But they're all based on things that you'd see on the footprint or in the if you ever watched like Bookmap or something like that, like the DOM and the time and sales, like it's looking at things like that, right? Basically order flow based signals, so that I don't have to analyze, I don't have to watch the DOM at all. I don't have to watch the time and sales. I can just wait for the signal because the algo's doing that, right? I don't need to analyze what each one of these bars means. If I don't want to, I could, but I don't have to trade because there's certain patterns that I'm waiting for that basically tell me when a trade is valid or not. Now you'll see there's multiple different charts here, and these are just different time frames. You can see that this is my highest time frame. This is Renko 80T, which means 80 tick. So this is more for analysis. I don't really trade off of this, but you can clearly see, and I've got the zigzag here to show me how far we're going and how long it took to take each rotation. But clearly we're bearish here, right? And then you can see that we've printed this purple background bar on that bar, which means that we really can't trust that we're going to be bullish on this time frame, this higher time frame, unless we get some volume to develop to the upside above that level, that 10,900 basically, is where we would need to get, okay, Kat, to really trust that we are now going to be bullish on this time frame. You need to get above that. You'll see that occurred here when we got a move above. Technically, this one didn't establish volume above it, but this one clearly did. This one, the volume was down here. You can see the yellow line is actually the VPOX and where volume is, whereas the bar itself closes wherever price goes. But volume usually lags behind, but confirms the move once it gets there. So once we've gotten over those the momentum there to the side, because the purple shows momentum to the sell side. So they had momentum to the sell side. We broke over with price, broke over with the volume. Now anybody, if we came back into that level at that point, we would expect it to bounce because they're going to campaign against that, right? The buyers are gonna support that level. Now, unfortunately, unfortunately for buyers, we came up and trapped buyers up here, and so when we came back down, we can't trust that like just any dip into here can be bought, but it's possible, right? But you don't want to just like put your buy order here, because this low could just like it can easily get traded below, and then they can actually bounce back and come back to this level just to test to make sure that those trap traders are still interested in being sellers. So I know that's a lot to absorb and you don't need to understand all that, but that's just what the algo is telling me, right? So then this is just the 32 tick, which is a little bit bigger than the 24, but significantly less than the 80. The one I trade on is the 24, and the reason I trade on the 24 is because each bar gives me about 15 points of movement. And so if I entered here, I can put my stop just below that bar, and it's very rarely going to be much more than 15 to 16 ticks. Sorry, 15 to 16 points, right? In NQ, there's 4 points to a tick. Yep, I would be scared of NQ without the algo too. I would never trade the NQ if I didn't have... if I had to look at the DOM, I would never do it. And honestly, if I was more of a level-to-level momentum trader, I'd trade ES. But NQ offers more opportunities for like individual rotations. I can make pretty decent gains in either direction, just trading a range back and forth. ES, you can technically do that too, but if you're wrong just a little bit, like if you're not perfect, it can kind of backfire. With NQ, like you get enough movement that like these 15 to 20 points are not that hard to get. There are days though where it's going so bleedingly fast that it just makes more. You can actually trade ES with NQ strategies, but yeah, I'd said NQ scares them, and I avoided it for 2.5 years. I refused to trade it. I only traded ES. I started to do better when I decided that I needed to find a system that could trade both. Yeah, for me it was recognizing that I don't, basically, I've said this in other videos too, is that this system is not, it's good at some things and it's not great at other things. Simon's system, this is really good at staying active and getting paid pretty much every day. Yeah, I got a new kitty. I got a new kitty. Yeah, he's noisy. He's a Sphinx, so he's kind of, yeah, he's different. And very vocal. But yeah, this system is really good at staying active and getting pieces of the day, like almost any day you can find trades. What it's not great at is catching every one of the really big moves. It didn't miss this one, but it does miss moves sometimes. Like this one here, there's no signal, and like you miss this big move. And so if you are used to trading and getting in like on breakouts and like riding waves and trading momentum, you know, buying pullbacks, selling rips, like stuff like that. This system is different than that, right? And that took me a long time to accept because it's just not what I was used to as a swing trader. This system is more like get in for your 70% win rate here, get out at 10 point, get out most of your risk at 10 points, trail runners, you know, and if they trade under here, just exit, right? And like miss out on the times when it goes, like that's how this actually works the best. And once I started to accept that, rather than buying this, being like, okay, there's the signal to get long, I guess we're going back to high day, right? Like no, no, doesn't do that. Does not do that. Once I stopped fantasizing about that, I started trading a lot better. Yeah, he's a cool cat, Ed. You know, the hairless part of the Sphinx is a little bit weird, and they require a lot of extra care because they have no hair. So like you have to like clean their ears every week and clean under their like nail beds, and there's all these extra like you have to wash, like give them a bath every once in a while. They can't be in the sun for too long, right? And yeah, you have to give them moisturizer and stuff. But their personalities are really unique, and I've had Siamese before, and those are really cool too. But I've always wanted. I knew a Sphinx from like 10 years ago when I lived in California. We had a friend who had a Sphinx, and it was just so intelligent, so interesting. Such a different cat than like a typical house cat, just a different animal altogether. Like the species, like just is totally different. It's not, but the change in breed like is almost like some sort of mix between a dog and a cat. Like it's obviously domesticated, but super intelligent. Like yeah, like just somewhat dangerous because it likes to get into stuff. But if you keep them busy, they're really sweet cats. And because they're hairless, all they want is to like snuggle and sit on your lap and like wrap up in blankets and stuff. So yeah, they're the exact opposite of my like what I remember growing up with like the aloof house cat. It's exactly the opposite of that. He's anything but aloof. Like people come in the house and he just like runs over to them and all like is super social. It's very much more dog like, but and he kind of doesn't really look like a cat. It's weird. It took some getting used to, but I very quickly became a Sphinx fan as soon as I met that cat 10 years ago, and thought his name was Yoda, and so I thought I gotta get myself a Sphinx someday. And I unfortunately that my two Siamese passed away within a year of each other. Last year I lost the younger one, and so I've been without a cat for a little more than 6 months. It was time to find a new one. So he was I adopted him from he was supposed to go into a breed. He was a breeder's. He was going to be a stud, but they got another stud that was like more preferred by their queens. So even though he wasn't a kitten, really, he's 2 years old, but he acts like a kitten, but he's actually 2 years old. He was supposed to be a breeder, and instead they decided to make him a pet, and so I adopted him that way. Thanks. Yeah, I'm, like I said, happy to be a cat owner again. Come here, Ronan. Come here. Oh, okay. Yeah. He's not quite sure why I'm talking to the screens. He's definitely a little bit confused. He keeps on coming over here and like looking around, thinking there's someone else here. He's very clever. Like smart enough to know it's weird that I'm just talking at the screen, but not obviously aware enough to think that there might not be anybody else in the room. But yeah, the cats in the past wouldn't even have given it a second look. And he's just like, what is going on in here? All right, so now we've developed some. So the sellers tried to increase momentum here on this purple background. Whoops, on the purple background here, and we got buyers responding aggressively with volume. That's what the diamond says. The star is basically just they aggressively held that level and price closed all the way up here, even though the aggression actually happened way down here. That's basically what the star is telling me. And now that's not always a buy signal, but when there's purple bars to the left, and when you're at support that's been developed, it's pretty consistent. But you can see that this is a higher low, so it's not quite as good as if we would have traded underneath that, unless you think it's bullish. And as we talked about before, on this tiny little time frame, we might have established a little bit of excess below the voodoo range and below that previous support, and so maybe it is bullish, but I'm not anxious to buy down here really. Yeah, and that might be wrong, but I would prefer not to take stops going long when I'm pretty confident that we'll get a short setup that's better. Let's just put it that way. So, and that could be totally wrong, right? Because it's all new participants with London Open. Sometimes you get really unexpected moves at London Open. So, and it only opened 17 minutes ago, which is another reason why I'm kind of relaxed, because I usually don't trade the first 15 minutes of any Open. I realize there's some good trades there, especially if you're momentum trading, but yeah, usually not my cup of tea, because I am not able to limit my risk as much. Something I've added recently, I changed. If anybody was here for the stream I did the other night, I talked about how I used to use a lot more. I used to have these green bars and red bars show up a lot more. All they are, they're signals that the high or the low of the bar traded beyond where most of the volume was, but yet they closed in the opposite direction. I was using a pretty low time frame for that, like a 10-minute time frame, so that I got more signals. But I realized that in this scenario, because I don't use them very often for entering trades, having it be at such a small interval was not doing me any good. Yeah, I agree, Ed. Frankfurt Open is a good time to start watching. You're right. And it was, if I remember right, we got a rejection at the voodoo range level up there. What do we, 1 o'clock Central? Yep, right here. Rejection above the voodoo range level, shift volume lower, drop. So, but yeah, so I used to use these a lot more, but as I've added other signals, I've been less attentive to them. Let's just say that, these outlined green and red bars. So because of that, it's you really don't want any more signals than you can process. And if I'm not processing something, it's probably because I have too much, or else they're just not working as well as some of my newer signals. So my most recent overnight, I think it was yesterday, I get my days mixed up, but in my most recent stream, we did back testing with different settings, and we found that with the 10-minute setting, these were there were some really good trades with them, but they were also printing a lot of times and not like developing into anything. It's not that they would be immediate stops or anything, but they just weren't really doing us much good, right? And so I decided to go back from 10 minutes all the way up to 30 minutes. And because of that, I've also now been able to print the running 30-minute POC, which is this pink dotted line here. And that's going to help me, hopefully, determine where prices compared to where volume's already developed. And for instance, when you get a red bar or a green bar that crosses that line, and there's been, this isn't a very good example because POC was right here, but if this was green, outline, it wasn't, but if it was, what I would be able to do is look and see, well, where was POC before? And you'd see it's up here. And so then you could scan back there and be like, oh, I see, there's this big volume shift here. That's probably where we're headed, right? And then if you were bearish, you could start looking for trade entries wherever POC was before. Now, in this case, they may not make it there, but it means that these shorts, even if it's a valid setup, are not going to work quite as often, because I know that there's liquidity up there. Since there used to be high volume, people want the market to get up there. It doesn't mean it will, but there's interest in getting the market back up to that level, or at least wherever the volume ended. It's not necessarily going to touch the POC, right? But is it going to like at least like approach it maybe to like 10.948, 10.950? It should, maybe not right away, but it should try, right? And so the very first attempt to reverse is here, and we have a huge gap between where the POC on the 30-minute was and where we're trying to reverse. So it makes sense to me, if I've got to filter out some trades, I would not short that and instead wait for them to at least make an effort to get up here. And then if they struggle and then roll over, then I can start being a little more aggressive. It also means that if I had an entry here, which I guess technically I did, but the timing was a little bit too early. But I did have purple bar star here. It was just it was a higher low, and I wasn't excited about being aggressive to the long side. But I could technically say that I might want to look all the way up here for an exit, because the chances that we're just going to roll over here are less. It would be unusual. Let's just say that. Yep. There we go, Ed. When price approaches the previous VPOC, I start looking for an order flow for a reversal. It works amazingly well. Exactly. So the algos are going to be my order flow signal, right? And I just want to I want to see that VPOC get approached. And the question is what time frame works best, right? And like I said, for a long time I was using 10-minute, and it. What are you doing? He brought his toy all the way to me. He wants to play fetch. He's so funny. The 10-minute just wouldn't give me these big stretches, because the VPOC wouldn't sit up there. It wouldn't do this. It would start to fall very quickly, and so I wouldn't identify that like where volume developed was actually like this whole time while it's flat. Oh, you know what? I'm actually doing this a little bit wrong. It should be lower than that, because look, it was practically flat here. See that? And then it ducked lower, came back up, wound up there, and then broke down. So really where volume developed is here. That's where volume developed. It just hung up there for a while and then dipped. So now that I look at that, like this might not be the best one, but if they get up there and they roll it over again, it might be shortable, right? This one's like right on the edge. Like they just barely went into that area that had VPOCs there. I'd like it to get higher, but if they fail here, which they did, and then here they roll it over hard with an order flow signal like another orange bar or a star, it's probably a decent short. Yep. So the diamonds that show up outside of the bar, so the purple on the bearish side, and the blue on the upside are the unusual volume spikes. And I've adjusted that quite a bit. I used to have that be a lot less sensitive, and I actually have it set quite a bit more sensitive now, because I very rarely use it as an entry signal. I usually I use it to show me where I want my trade to happen, but the timing is not always at that very moment. In other words, once I've seen this, I now know that like anything that fails to go higher around here is, with an order flow signal of aggressive selling, is probably a good place to short. Yes, I agree, Ed. The trick is figuring out what unusual volume is, and that's what I've been toying with that quite a bit, because you can have it be really sensitive, and like I have it now, and then you do end up missing. You have two choices. Then you either take way more stops and take every signal, which is kind of crazy in my opinion, or what I end up doing is I miss some trades, like the one down here, because I don't take it as an entry signal. But if we return to that area and we like trade below it and rip back up, I know that as it breaks back above that area, that this area was clearly confirmed as being important. So I'm basically and then the opposite is you only see when it's really unusual, but sometimes you still get an immediate reaction, and other times you get just like level identification, right? So instead, what I decided is make my volume sensitivity very high, but make my decision to get into a trade based on volume very conservative. I hope that makes sense. So I'm seeing it whenever there's even slightly unusual volume, but I'm not necessarily taking the trade on that bar. I'm just identifying the area as important. And then I want to see an additional order flow signal through that area to confirm that not only is there interest there, but that they're aggressively defending that level. Because oftentimes they actually trade behind it just to be sure. Oh, they did come up and pretty much tag that VPOC. Just to be sure that we might actually short this. To be sure that there's no, they squeeze out all the sellers basically. and then once all the sellers are gone, then they can sell it. You know what I mean? It's like let's get all the buyers done, and once and anybody who was short is going to get stopped out. You get all that liquidity sucked up, and now if there's no more buyers, now the sellers can get active. So rather than selling the high volume, I'm marking or being aware of the high volume, and now looking for shorts into this area or through it, if that makes sense. The high volume tells me it's time to short if we can't stay above that, right? It doesn't mean I have to get down here to short, but especially when you're this far away, you can just scalp it, and if they fail to continue, you'll just exit your trade. But if they can continue to be aggressive through that to the downside, that could be a ripper to the downside. But I'm not gonna get into a trade here until I have a confirmed signal. And now I can use smaller time frames. This 20 tick has already gotten a confirmed signal, but it was with unusual volume. So I'd normally not take that. I would wait to see if they continue to defend it, even knowing that I might miss it. But when the 24 tick would signal, I could take it. But see how the perfect example, right? They put in the big volume to the sell side, they rip it higher, and now we're going to see if there's any buyers, any sellers, once we get to that VPOC. We're exactly where that 30-minute VPOC is. Right here, see that? It hung out there for a while after they wound up from that consolidation. They wound it up, took all the liquidity, hung a bunch of volume up there, and ripped it down. So now we've returned to it. And like I said, if they rip this down, it does make sense to sell it, in my opinion. But it's got to be an algo. It's got to actually set up. I can't just guess. It has to be valid. But this is where I want to short. Let's say it that way. I want it to give me a signal here. I just don't know if we'll get it. More heavy volume. It's
Order filled.
So over here I got an orange bar, so that's good enough. Wow, that was really loud. Sorry. 58.25. So I will aggressively take profits here so that I can hold runners. What did I say? Okay, I would take some
Target filled.
Yeah. And I'll probably take profit one more time if we rip into these pink bars, because the pink bars often act as resistance. They might not give me the chance. But support, they often act as support. So I will, if they can just go into this a little further, I'll take another 2 or 3 off, and then I'll just leave the rest, right, in case we really roll. But I know that we really need to get through this to do anything serious. But I take that first profit at 10 points because I don't want to take repeated full stops when I'm wrong. I want to decrease my risk so that when I do catch the big rips, that I get them basically for free. I've already paid for the risk of the trade, you know. So now I can still lose on the trade, but I'm not going to lose a full R. I'll lose small in the trade if it just rips higher. But now if it starts to go down and I can take profit again, then I'm actually going to be profitable in the trade, even if it rolls over, even if it continues higher. But if it goes lower, it means I'm just got a free look, right? So I will take that I will continue to take that first profit very early, especially if I'm like trying to attack aggressively here. There are times when I won't do it, but I need like a really good reason because it hurts to like see your trade start to work and then not, like take a full stop on it. That fucking sucks. I'm sorry, it does. Okay, so as they get into these pink bars, I'm watching to see what happens here. This is the only time when I actually watch the DOM is when I'm trying to take profits. Because what I'm basically seeing, I want to see if they have any interest in supporting this zone because it moved up the pink. I'm going to take profit. Yeah, fuck. Trying to get filled just a little bit lower. I might have to. They didn't quite fill me, and I didn't chase it. Probably should have. I didn't get onto the DOM fast enough. So I'll try to see if I can get filled at 35. It's not quite what I wanted, but let's see if they go back to 35 and fill me. They might not. The problem, the reason is because if you look, this is where all the volume was in the pink bar, and they're finding buyers above it. See that? That's what I want. That's what I was looking for, and they on the DOM they supported this zone. There was like a big buyer that came in, and so I quick put my limit order in, but it didn't go any lower. I wanted to get filled like there, but it didn't get there, and yeah, so they'll probably stop me here. I was just too slow. Like I could have just marketed it out, but sometimes I get I hesitate, and then you don't want to give it back. So let's just see if it rolls. See, now it's like I almost don't want to take profits there because now if they roll it, they'll probably come down to this one. So what I probably should do is move my target a little lower because like if they do break that low, it's probably done. But I won't. I'm not gonna get that's overthinking it. to be perfectly honest. At the end of the day, it just either works or it doesn't. So I will take another two at 35, and then I'll be more than halfway out of the trade. So I'll be out 5 with 4 more.
Target filled.
Nice. All right. So now let's see if my instinct was right that they're probably headed for the midpoint of this channel, and if I had to guess, that's probably where they're going. Is right there. And they'll come back. Remember, this one was the high volume one. Oops. This orange with the purple diamond here is where all the high volume was. And whoop, God, let me turn that down. I'm so sorry. I'm so sorry if you have headphones on, you guys. High pitch is awful. I turned it down, I swear. I forgot to do it before because I got in the trade. But most of the volume in this bar happened right here at that dash and where the line gets there. Thanks to Ed, by the way, showed me how to use a line for that, which really helps change my trading, honestly. So props to you, Ed, for showing me that. Way easier to see the volume shifts. So once we get there, here, let me put the right here. Once we get there, we're going to see whether or not the buyers. See, now I just have runners now. And so now the question is where do you want to put your stop? I should make that very clear. Where I really want to put it is I want to put it above this. I want to put it here. All right, that's where I want to put it. It's like 55 above that VPOC. So even if we come back up and tag it, oh wait, yeah, even if we come back up and tag it, that's where your stop goes, in my opinion. You could technically put it here, right? But like you're saving a tiny little bit just for the like hope that like it doesn't stop you out. Like why, you know? Oh, they might trigger along here, in which case I'll just exit the runners. Let's see. Huge help, Ed. Seriously, it just like I realize it doesn't really. It's technically the same thing, but just seeing it differently helps a ton. Yeah, I agree. Yep, I agree. Ed said, if you guys can't see it later on, Ed said, see where the VPOC was at the same level for 2 bars. That's a great reversal signal. And it, yeah, that right here, it basically went flat. And that's basically, it's a sign that the price is going higher, but they're not able to establish volume any higher. And so we actually get mine turns orange when that occurs. So I'm waiting to see if they give me an algo signal to exit here. High volume, we're gonna wait. That's expected. High volume here is expected. They are attacking. Why can't I grab him? Oh, because I got the wrong. They are attacking this and trying to find buyers here, but I expect it to fail. So yeah, when the VPOC goes from a negative bar to a positive bar, and it rises, right? So sorry, price rises and volume rises, or stays flat, it's going to turn green. And whereas when price falls and volume falls with it, and you shift lower, you're going to get orange on my system. So that's basically, there's a little bit more to it, but that's basically what it is. That's the crux of those signals. And technically, even if it's flat, it's still relevant, as long as you're at a location that is like important. But what you really want is actually for volume to drop. Yes, correct. Yep, I agree. Ed. They pushed it higher on. Oh fuck! They got my stop at break even. Fucking a. I forgot to fix this again. I did this the other day. Get up there. 55. Okay, we're gonna go 55.25, and like they might hit it, right? Like it, and that's fine. It's just runners, not a problem if they hit it. But I will, if anything, rather than taking a stop at break even here, I actually prefer adding to my short, like adding like 2 or 3 back. Yeah, exactly. On Renko bars, you really can see it, and it's one of my, even if I had to pick one thing to look at, like if I had to turn everything else off, what I would leave is the yellow line. I just have to do a lot more thinking and attending. I couldn't just wait for the orange bar or the star, in which case this time it got both of them. And having the color change of the signal keeps my confidence high, so like I don't have to hesitate and wonder like, is it close enough? Is it good enough? Like is it there? Yes, I've taught it to tell me that because that's when I'm supposed to get in trades, right? So I just do it. If you're good at just like watching one signal and like executing, you don't need as many signals, right? You only need one. Like you just make it signal when you're confident that it's time to get in. I tend to overthink things, and so instead I prefer to have everything here that I need, and then I just have rules about when I can follow them and when I can't, and that's what keeps me attentive. But the important thing is while they're coming, these are like basically low volume bars, the pink and the purple, and so while they're coming up with low volume, you heard me. I was already prepared. I was looking for the location I wanted to see it reverse, and I was already thinking short at that point. They then got this big aggressive buyer at the top, and all they needed to do is get a big aggressive seller at the top, and he was screwed. And you'll see where they came back to was his VPOC. See that? The big aggressive buyer's VPOC is where they tried to get to. As soon as they traded above that level, price rejected. That's why I said at this arrow, you could probably add to your short. I could add back another 8. Like, at least. It's a good signal. Especially after that pink background and the pink bar. It's basically they got tempted to reverse the momentum. The buyers attempted to reverse momentum and got denied. Right there. So, like, this one is it might not be as good as this one, but it's a good sign that it's probably going to continue lower, and usually you're going to break this low. Like more often than you won't. And then you have to ask yourself, well, where are we going then? Well, like I said, where we're going is probably to this high volume bar. We're going to go test below that and see if there's actually buyers down there or not. So, if you know, once it gets down there, I'm gonna be much more aggressive, trailing my stop. I for some reason have my what's it called, Ninja Trader brackets and trailing stops and all that stuff automatically put me at on uh, break even. And I'm really glad I caught it because if you look, I got into the trade right here. Break even's usually not a good place to trade or stop. See how they get it by like 2 ticks and then roll it. So I need to fix that. It shouldn't be going to break even. If you're tempted to move your stop to break even, move your stop to like 15, like trail it by like 15 points or something instead, and just like take your profits, right? Because it's probably going back to your entry if it gets a pullback. And if you can't hold it past break even, take your profits early and just re-enter, right? And, or do both. Like do what I should have done here is take profits early as it comes down. I come back with runners. Don't exit here. Actually re-short it and then take profits early again, right? So then I cover some here. I cover some under this pivot, this fractal here, especially because since there was high volume behind it, I would take another like 2 or 3 here, and then I'd leave the rest of the runners for this one. But it is nice to start the day with a guaranteed win. We will not lose this trade. We've already paid for the risk completely. Like I said, really, if I could get it down to like 75, I'd be a happy camper. Do I think it's going that far? Probably not in one move, you know. But it could. It definitely could, especially since Frankfurt was bearish. London started with a buy and then rejected at the VPOC from the end of Frankfurt. Like, it's pretty bearish. So it could just be the start of the next leg down, right? But is it always? No. Not always. You can see on the higher time frame at the low, we actually had a high volume marker here. So that makes the low more likely to get taken if it's bearish. If you think about that, if there are a bunch of buyers here, guess what happens when we go back to their level? They sell. Yeah, dude, the VPOCs are incredible. Like, it literally changed my trading when I started paying attention to them, especially on Renko. Like, that is really the key behind like Simon's system is the VPOCs and what they do. Like, most of the signals involve the VPOCs. Like, I'm not really like allowed to say exactly what they are. I may or may not know, but they a lot of them have to do with where is the VPOC relative to other variables. So like, if you just watch the VPOCs, yeah, you'll catch on. And yeah, he doesn't, in his system, he doesn't connect them with the line. He just has them be, they're just dashes. So, I mean, he's able to like interpret that really like just fine. I see the light, this looks like waterfall, you know? Like trap, waterfall. Like low volume, trap, waterfall. That's what I see. It's not that clear here. Like this is pretty clear. Right? The flattening. And like this flattening, like that is clear. And this is clear. Right? Like that maybe is just as clear. But the fact that like this is a trap and then a waterfall, like that's harder for me to see when you don't have the line personally. Yep. Right, yeah. VPOC spike up short, VPOC spike down buy. Yeah, it really it can be that simple. Let's put it that way. If you want a simple system, that's pretty much right. Okay, I exited the position there because we got a high volume bar coming down and then a speed bar coming back up. It may not be done. Okay, but that is enough for me to go ahead and exit the trade. Let's see if that was right. See, the problem is that the location was a high volume level and they put a high volume candle down. See that? And then they immediately snuck back up on low volume, meaning like it didn't take very much effort for buyers to take this level back. And in my opinion, it should have been hard for them to take back. Now, it might just be another trap and they just roll over and, you know, that's That's okay. It's not good enough to buy it for me, but it is good enough to go ahead and exit the runners. I turned it down so low you probably didn't even hear the lady, but I did get out of this. I did get out of the trade, um, because that, like I said, that signal, the diamond in the middle, is what I call a speed trap. Simon used to use something called a speed bar, and then he stopped using them because they were showing up too often. And I actually kind of liked the speed bars, but you needed to know when they were relevant and when they weren't. So I tweaked it a bit, and I made it only show up in certain conditions. And one of the conditions that I make it show up in is when the very last bar to the left of the speed bar had much higher volume than like other bars nearby in that same wave, right? So the wave down here, if you look here, I'll just draw the DVP. So see how now this one is, this DVP is way up here because this bar was big volume too. Nope, sorry, this one was big volume. So there's technically there's two spots where there's big volume here, at the very bottom and on this bar. So here, let me show you this again. So this bar had volume, and that volume is here where the VPOC is, see, on that wave down, and this bar had volume, and that volume was here. And so the problem for me, the reason I exited, if I would have drawn that DVP, I might not have exited. But the problem is, I saw them quickly take back with price this VPOC. And I knew, because there's a diamond here, that one must have had relatively high volume compared to the last couple. And it did have more volume than this one, but the actual VPOC of the entire wave centered here. So it's probably not going to be like a V, but this is going to act as a magnet, basically, more or less. Does it reverse? I don't know. But good enough for me to just kind of say, hey, I got a good trade out of it. I made $254 on micros. I'm happy. I mean, the truth of it is like, you know, I got home from a 13-hour day and didn't even make twice that, right? So I might enjoy my job, but that's, you know, when it works well, it's like, okay, that's right. Now I remember why I do this, right? Now then you start to remember, like, I mean, I realize like $254 is not life changing. Sorry about the cat. He loves the hallway with my vinyl floors. Luckily, they're not wood, so he's not. I don't care if he's not going to scratch them up. But you know, $254 might not seem life changing, but the truth is when you realize that like that getting that $254 can literally happen almost any day, almost anywhere, and it's literally just a matter of putting in the time to learn when to do it, you know, and when not to, and then having some discipline. But yeah, it's the truth is that if you really wanted to, you don't have to trade it with micros, right? Like that number can change based on whatever your situation is. But where I'm at with my accounts, like trading 8 micros to 2 minis is really the most that I'll mess around with, and just because I know that if I lose more than a couple $1,000s in a day, like it's gonna push me back psychologically, and like I said, eventually that might not really matter, but right now that would be significant in my account and in my mind. I feel like it would be significant, so I will usually trade 8 micros to like 16 or so, and then up to 1 or 2 minis if I've got a cushion, right? So if I've already made like $400 or $500 on the day, I will go ahead and switch to the minis. And I've had big days that way, but I'll usually start the day with 8 micros. Yeah, man, I agree. Like I said, $250 a day can change a lot of people's lives. It's true. I mean, if you can average that regularly and you don't have huge drawdowns, it can be life changing, right? Like you need to actually be able to follow the system. But the nice thing is in any situation, I use hard stops, so I shouldn't be risking more than that. in any trade. You know, so that's the good news is that it's you know while it's not it might not be anything extravagant. It also means that my loss on a single trade is not life changing either. But I agree when you start to think about it like a string of trades and like average throughout every day. I mean that's like 50 grand a year. You know, like at least maybe 60 grand a year. Like that's what a lot of people make in a grueling, difficult day job. You know, like I happen to like my job, but even if you didn't like, if I think if someone paid you 250 for doing something that like was just some like yeah it's gonna help pay the bills. You know, it's not nothing. Um, and yeah, like what I love about these mean reversion systems is that you really can get that trade almost every day. It's just a matter of being there and making sure that you're managing risk and that you know how to read signals basically patterns like pattern recognition is pretty much all it is. You don't even have to know what's going on in the market. You know, you don't have to know the latest news. You don't have to follow some person on Twitter and only trade when they trade. Like it's literally just learn the system. Whenever you want, open it up, watch for that pattern. If it happens, take it. If it doesn't, don't. Um, there's other ways to get into trades, but that's definitely one of my favorites. For sure. The VPOCs are just really powerful. And so you can even watch that 30-minute VPOC line, this pink line. I'm noticing now that, see how this is like stair-stepping down? Right? So buyers are going to need to start to aggressively attack that. Otherwise, they're not going to hold this level. Right? This big seller is, even though he got briefly trapped, they're not going to be able to hold him like his jail cell is going to get unlocked basically. Like he is trying to break out of jail here. They trapped him and his buddies are like bailing him out right here. And if I ever am not sure what to do, drawing the DVP on the bar that you're or the wave that you're currently on is really helpful because you can immediately see how the profile is looking for that move, and you could easily just say like, okay, I've got 2 volume builds here, one here, and one here, and then the next volume build really isn't until all the way up here. So like, that's where all the trading is happening, right? So if you are wondering if you have a trade there, well, you either want to develop volume underneath here, come back up and reject auto one of these and short it, or what you need to do is have enough room up here where if you came up that you could target this one. And I don't think that's good risk reward personally. So in this case, there's really no reason to think long because that's really as high as I would expect it to go on the first try. And I'm not bullish, so I'm not going to be holding runners going long. So right away, it's like, even though these signals might look aggressive, there's really no trade for me to the long side because I should expect them the sellers to try to continue to hold these VPOCs. This, and then like if I did it over here, you'd see that it's here. And it's like, why buy if that's where they're going to defend? And so instead, what I'd prefer is this. Or even better, this, right? And then down. That'd be even better, but doesn't mean it's going to happen. Technically, I could have held the runners. I don't have strict rules about what to do with runners. Generally, the default is just hold them until you get to your target, right? And that's almost never bad. But yeah, if I see something that I think is going to create some sort of turbulence, I will often just exit them, and just wait for the re-entry, because it's very rare to see this. It's just, it happens, and it sucks when you miss it, but this is way, way, way more rare than this and then this. So I don't really care which 30 points I get. It doesn't have to be the impulse move. It can be after the retrace. I want the highest odds one. I want the easier trade. I want the layup. I don't need to throw three throws, three 3-pointers. I don't need to throw to try for field goals in this game. I can just take layups and penalty shots all day and win. Like, I don't need to be in some big rush to be getting into trades. I don't need to run up the score. I just need to try not to shoot when I think I'm going to lose. If I think I'm going to miss, I'd much rather not shoot. So high volume bar with a volume shift. See that? But look how the background is purple, meaning that they are also trying to turn momentum to the downside. So there's some mixed signals in here. It's like that's a bearish sign, but this is a bullish bar. So what does that usually mean? When it's bearish, they're gonna try to continue and fail. They might save it underneath and bounce it. That certainly is possible. But I never assume that what's going to happen is just reversal. Like, no. Like, it happens, but yeah, it's pretty rare. I'm just getting excited that they might set me up for a short at this point. It's like, please come back and give me an opportunity to get in. But they have now established volume above this purple background bar here, which is potentially bullish. So now we have to be a little bit cautious. It doesn't mean we can't short, but it means that we should be taking profits. If we get a short signal, we should be taking profits aggressively into that low, because they have potentially trapped traders down here. They've established some volume above here, and they had a momentum shift to the downside. In other words, they tried to go up. Sellers pushed hard. They got very little follow through, no volume down here. And so it's, as long as they hold that level, it's fine. Once they develop volume up here, the buyers, sellers are going to be uncomfortable. You'll see that negative 120 delta. Like, someone basically stopped out of their long or got really aggressively short there, and nobody followed through. So if you're going to get a V reversal, this is how they happen. When it looks really bearish and they just trap them, you know, like this is how you get those. Yeah, so the VPOC of the wave down is here, and we've already closed a bullish bar with a VPOC there, you know, there or above. So these two bars here, there's potentially traders trapped down there. Sellers trapped down there. It doesn't mean we can't get through it, but it means they'll probably buy when we go back to it. So what I'm saying is, if you get a short signal, you can short it if you have good risk reward to target this area. But to expect them to just rip through this is actually now less likely. What's more likely is they're going to probably balance in this whole area and like renegotiate some of that drop, which is great because I exited, right? Like, results wise, I'm totally cool with that. Totally cool with that. But you can probably see how the channel here, the blue, I make him blue on, he has it like rainbow colored because he sees it as like a lower, like downstairs and upstairs. And I see that, right? But what I see it as is like just your like I traded Keltner channels in my swing trading, so like I'm familiar with the patterns already. I don't need the extra. Like I just need to know where the ATR tells me most of the volume is going to go, and from there we can see that if we can, the way you think about it is if this is balance, trading underneath this channel requires more energy to continue price lower beyond the blue lines requires more energy, right? Doesn't mean it has to reverse, but most of the volume is going to happen inside of here, and then there's just a tighter one in here basically, right? And they're like two slightly different ways of looking at the same thing. um, I don't use the purple and the red one very much at all, and I've actually removed them and replaced them with a different type of channel that I'm not going to go into because it's complicated, not because that's some secret thing. It's in Chart. It's just I just changed it, right? Because I'm experimenting to see how the interaction between both channels might tell me some hints about what's happening to the market. See how the inner channel here is getting way above this lower channel, the outer channel. It's like getting towards the midpoint, but they can't actually make a higher high. It's basically divergence, and it creates a drop. So that's, like I said, I don't have signals built on that yet, but I'm watching it. And what I'll eventually do is actually take out the middle channel and just look for that divergence and signal it with like a new color or something like that. Always working on something new, but eventually we'll have it. But yeah, I'm seriously considering, if I had to remove lines, it'd be this red one and this purple one. Because while they do use them in the room to help with aggressive trading, I use the midpoint more. And he actually has the midpoint missing. So like I said, you just see the thing, you see everything differently, you know, everyone sees something different. And for me the midpoint's important, but the tighter lines are like arbitrary to me. I know why he uses them, but it's like I said, I don't really need them. So if you don't really use it, it's probably better to get rid of it. But I'll tell you, the way he does use it is for retraces. So like this, and I see it, right? This, like I get it, but I can see that without the line. Like I can picture where it is. It's between the midpoint and the blue one. Yeah, I agree. Yeah, the 50 is important. 50% line is extremely important, especially if you just look at whether or not VPOC can get beyond it, and if they get any volume up there. It's a really easy way to tell who's in control of the market. As soon as you get these attempts to break it that fail, like if this turns bearish, yeah, it's done. It's bearish. I'll find one. Now, sometimes it doesn't stay bearish, right? But that is a perfect example. Can you scalp that? Hell yeah, you can. Like, sure. Why not? As soon as you see it reject here, just take it short. Exit on the important level down here, right? Cha-ching. And then you got to be ready when it V's back up. But what you'll see sometimes is test, fail, test, fail, test, fail, right? So like 10 points, 10 points, 20 points, 10 points finally stops you out, right? And I mean, I don't know. I don't see anything wrong with that. Maybe do it with small size, but how often? The problem is how often does it hit the red line when it doesn't hit the blue line or the middle line? I think rarely. Usually, it gets Usually it does one or the other. It either hits the middle or it hits the edge. It's not going to trade in here very often, right? It's usually going to go clink, 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 right? Like, it's not just going to spend all its time inside of here or like down here. Like, Like if it does, I don't want to trade it. So I'm tempted just to remove them, but I haven't yet. But like I said, that's probably going to happen. Because let me see. What does it even look like? I gotta get the other one. Hold on. Let's just do it. Let's see how it goes. Beep. 24. Yes. Let's do it. I think that's a lot cleaner, personally. I already see it. Like, you don't think it bothers you, but it's like, it is less information to see. And like I said, I can already see it here. You know what I mean? I don't need to know that it tapped it. I already know that it is bearish there. Right? And if we go back, like, is it really necessary to know that that tapped it? No. Like, it rejected the midpoint. Right? Same with here. Like, do I care that it went through the purple line? No, because it rejected the blue one. So, yeah. I think this is really what I want. And then, like I said, I want to know if these shifts, see how much space there is between there? Like that. I'm noticing that occurs at the rotations. So I don't know how to code it yet, but there seems to be something there. See that? The relationship between the inner channel and the outer channel, like when it's not really changing, it's just balanced. But once it starts to, like here, not really doing anything, not really doing anything, right? You don't get it yet, right there. See how it goes all the way up to the blue channel, and then it starts to reject right there? Like, I already know at that point that, like, it's not going higher. So, I mean, in this case, it's just straight down. But let's say they tried to bounce it here. I wouldn't want to buy it because I already saw this. So I've been watching it, but I don't have it quantified yet, because sometimes it actually goes further than it. So, yeah. And then, but like I said, once you get a higher low there, especially if this is divergent, but it's not, but sometimes it is, like that crossing back in can lead to big moves. Because again, it just takes a lot of energy to keep that out, to get this shaded channel to stay outside of the blue channel. It takes a lot of energy. So when you do it, and then price, you wouldn't know right there, but when price rejects here, like this low becomes really obvious that there's been a momentum shift. You might not catch the aggressive one, but hell yeah, you'd see this. Because they went way outside of the blue channel, and price couldn't go any higher. And we know that they can only stay outside the channel if price can continue to go higher. So same here, price touched the channel, and see how it's now come back into it. Again, is it like timely for an entry? Not necessarily. Not if I make that the signal, but there might be a way to quantify it with like rate of change, basically, compared to the two or something. I don't know. I'm not sure exactly, but I can visually see it. It's just a matter of like deciding like what is the metric, like what is the relationship that I'm seeing, and what's the best way to measure it. You know, I'm not sure, but just like I said, an interesting idea I had, because I've used both of these channels before, and I've just never used them together, and it'd be a lot to look at to trade with, but if I could just take away the shaded ones and turn it into a signal, so I would be notified that this right here is divergent and it's outside of the channel, or at least like maybe even at the channel. Like those are good trades usually. So right now I'm just kind of watching for it, and I'm otherwise trying to kind of ignore that other channel. Um, but yeah, I'm not a huge fan of the Sierra chart divergent detector. It's not set up the way I want it to be. So it's almost like I'd have to build my own divergence indicator. I don't know. It wouldn't be that hard, but like just the sensitivity measurements on it and stuff. Like I don't know. Like I don't find it very helpful up until like a sensitivity of like 80 something. But then like it's like exponential as you go higher. So like you'll get a bunch of trade signals at like 80, but right when you get to like 85 to 86, like you go down, like it cuts your trades like 60%. And I'm like, well, what about if I want like 20% less? Yeah, it's not ideal. Like it wouldn't be that hard to build because I've seen them work on TradingView, and I know how to code in um, PineScript. So like I could just see what my divergence indicators look like on PineScript, and then just build a spreadsheet on Sierra Chart and like teach it that like what a higher high looks like and what a lower high looks like and all that. Like you could do it. It's just a lot of coding. And like I said, I until I know exactly what I want to measure, I don't want to start digging into that because what I tend to do is I'll spend 3 days like with very little sleep, just like doing it until it works, like until the program works. So I'm just not that good at programming, and then like when I see it, I'm like, fuck, that's not what I wanted actually. And so I don't have enough experience. I'm it's just a hobby, and I've learned it from trial and error. So a lot of times the mistakes, the bugs I make are the ways that I learn. So it's not bad, but it's time consuming. Um, you do learn a lot from coding those and figuring out that something might like quote unquote work, but it doesn't work like you thought it would. It can tell you a lot, and it can give you some hints into what you should be looking at. But man, it's just time consuming, and I have a 43-hour work week, and only so many days to trade, and try to have a social life, and it's just like I could miss a lot of sleep trying to code every idea I've ever had. Nice, Ed. You done your own divergence sector? Does it work better than the Sierra chart one? Like, does it signal you more consistently? Because it shouldn't be that complicated, but for some reason, okay, good. He says much better. The Sierra chart one sucks. Okay, I'm glad I'm not the only one who feels that way. It's almost like it's too complicated, honestly. Like it's got like all the sensitivity measures and all that stuff. It's like, just tell me if there was a higher high or not, and like maybe I'll give you like a look back period. How does that sound? Okay, I'm gonna run and get another water, you guys. I'll be right back. Hold on. Back for more. All right, so we're back up to that same level where they trapped right here, right? Where I said we don't want to trail. It's basically my entry. Because I said we don't want to trail stop to break even because they'll sneak the stop. We're back there once again. So I've got this. Did this move? Okay. It's funny on the YouTube screen. My TV looks bigger than it really is. That's funny. It goes into another screen slightly. I don't know why that is, but yeah. See that it shows this even though I can't see it on that screen. It's on a different. That's weird. Oh well, whatever. At least it's not like naked ladies or anything. It's just a forest. Like the Microsoft forest background, so I don't have to be too embarrassed about it. But yeah, I'm glad it's not like anything NSFW. God, I mean, not like you can really see it anyway, but it's just weird that on the screen it looks like there's a border around it, and on my TV there's no border at all. But other than that, I mean, I've been using Streamlabs for YouTube, and I actually like it. I just realized that they have a low latency feature, so I'm trying that. This is actually on low latency. I didn't even realize I had an option for that. And so this video for the first time is on low latency. I don't know if there's a difference, but I know normally there was significant lag. There's also ultra low latency, but it says that it takes more CPU and stuff like that, and I just didn't really feel like dealing with that right now, but I may try that too. But I'm curious if there's anybody who's seen some of my other streams recently on YouTube, because the Discord ones were pretty much ultra low latency, but the problem with Discord is you can't see my freaking mouse. It's really annoying. You can't see the pointer. But on YouTube you can, but yeah, there's always been this lag, and I always assumed because it's going from Streamlabs and then posting to YouTube. And so obviously that takes time, but I did see that now it's got low latency, so I'm like, well, maybe that's a little better. And maybe the ultra low latency is worth it. We'll try it next time. Wow, they came right up to the voodoo range level and rejected. And I was getting refreshments and totally missed it. It didn't really trigger, though. The little arrows are a new idea. I'm not taking them alone, although I'm wondering sometimes if there might be situations where I should, but right now they're just supporting evidence of. It's basically a sign that there's sellers that were there, and so if we continue to sell that area, there actually that star would be a sell, because that level that here I'll show you. I'm trying to hold my water at the same time as I talk about this. So this arrow here. I just noticed lines up with this arrow here. These are both basically the same area. And the arrow is basically telling me that there was a buyer here at the back of this bar that either came in while it was coming back up and they tried to come back and he didn't get filled, or it approached him and started filling him, but it didn't finish his order. It also could be that they filled his order and then he came and then he added again, right? So almost like an iceberg. And so you don't necessarily just want to sell that, but when they test into it and then reject with aggression, my expectation is that this is probably a pretty valid short. I just haven't back tested it yet because it's a new idea. But it's something I always did with the DOM when I was trading ES. I was watched for that kind of thing. And on NQ, it's just visually too difficult. I can't follow the DOM. It's too damn choppy. But I can teach the algo to do it pretty easily. The trouble is the challenge when it comes to settings for that is how many ticks do you count as one level? Because if you play around with it, if you use in ES it's clearly one. But in NQ, if you use every single tick as an important level, you're going to get all sorts of weird, extraneous like signals. So I've really had to experiment with that. And what that means is that when the market starts to go faster and when volatility increases, those signals are going to stop working. They're going to show up too often, right? So I have to be aware of that. That like it's been optimized for like the current pace, and that if we start covering a lot of ground in a short amount of time, I'm going to get a lot of those arrows firing, and they're not going to be entries because they're all it is just identifying that more volume is coming into the market. And so you'll also see them show up way more during market opens and like the last like market closes, and they're really not that relevant then either because they're optimized to be during what like is normally seen. They're going to be really good during like Globex because they shouldn't show up very often. And when they do, it's pretty meaningful. But you can see, like in this case, this one over here and this one over here, these yellow arrows, they worked as sell entries. So I'm not saying they don't work. See, I can't even, I, yeah, I can't even see this. Um, they do work as entries when the direction is already identified. They work as entries. That's what I'm finding. So like the blue ones that show up at the lows when it's bearish are not good place to get long, but the yellow ones that show up at resistance when it's bearish are good. But like I said, I don't have enough evidence to just hit them by themselves. But thankfully, they often show up when other algos show up too. So I haven't really had to worry about it. But similar to these red outline bars, I don't usually use them as entries by themselves. But there may be, like that exact situation might be a good reason to do it. When you have a level that's already been identified as resistance, you've got, like I said, the red bar saying that we kind of tested a lot higher than you'd expect for a bar that closed red, like well into the volume area high, well past the volume area high, yet we closed bearish. And there's like this seller that like either keeps showing up or isn't getting filled. Like most likely that's resistance. So but really until I like back test it and see it work repeatedly, like not just like 50% of the time, but like most of the time, I'm not gonna take trades on it alone. For now, it's just to identify locations where when I'm looking in that direction for a trade, I will watch for a signal and be more aggressive with my signals when I see it. But yeah, I'm not confident with the setup yet to take it as a trade because I don't know how consistently it works and I don't know how likely they are to like roll over harder, like it did here and here, or if it's more likely that it's going to be like boom, 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 boom. I don't know. Like I don't have the evidence for that yet, so hard to commit cash when you don't have evidence for why it should work. But like this one, for instance, showed up in an up bar, and what I found is when the yellow ones show up on the up bars and when the blue ones show up on the down bars, what tends to happen is you get capitulation followed by a trend change. So that's pretty cool too. Again, not necessarily a trade entry, but sure is nice to know that there could be a capitulation move coming. And what I'd love to know is whether or not I can look on the higher time frame and see the same thing. Like here's one on the down. They trade back up into that level and it sells off. That makes sense. Because there was a big seller there. So they go back. Here's it's bearish and we get a big buyer here. They trade higher for a moment, sell right through them. Where do they come back to? Right where that big buyer was. Sell. Right? That should make sense too. So it's not necessarily a buy here, but it's an area that's important. But look, this one works as a buy. It came after sellers gave up on the purple bars. The arrow comes in here. I probably wouldn't. I might not buy this one, but when they come back into it and they hold it, especially here, when that held, that's probably an okay scalp. And then here it is on a up bar. Trend change. See that? Pretty cool. So like I said, I'm not taking them by themselves, but oops, but it's something I will be watching. And here I'm kind of wishing I would have, because it did not stop out. It came close, but like, it might even make sense to like try to short like right there. As soon as once I see this yellow, just be like, okay, as price comes back up, I'm just gonna start filling orders up here. Sometimes you'll get crushed, right? But like, and then sometimes you'll just miss it. Like you would want to short this. You'd have to do it pretty quick. Like once it hits the target, you'd have to know not to do it again. Because like here, this one did cross over it. And then signaled again. So it might take 2 tries if you do that. But you could literally get like a 5-point risk on MQ. That'd be pretty sick. I don't know. I'm gonna watch for it. But like I said, what I'm more excited about are these purple and pink backgrounds, because they are consistently working as momentum pivots. See that? So perhaps when we have a momentum pivot and an arrow and a direction, it might be good enough for a trade. But like I said, I'm not quick to incorporate. Like I will add it to my screen so I can learn about it and watch it, but will I actually trade it and like add it to my system? Not until I've watched it work for a while. Because I don't want to give away like earnings on stuff that I know works just to experiment with something new. You know? Like I'll backtest it regularly and I'll do things like this where it's like, okay, let's see if that would have worked. Like forward test it basically. But I usually, unless I've got another reason to get in the trade, I usually won't be like executing trades on something until I have like data that says like, based on the spreadsheet over the last X months, taking every single trade with this stop and this entry, this is how much you get and this is how often it happens. Once I know that, no problem. Now I can execute this. Now I can add it to my system as long as it's good enough. And the problem is if you wait too long, by the time you implement it, the market changes and you have to, it's no longer optimized. So there is, any edge does eventually, what's it called? It doesn't last forever, right? And that's just a real thing that we have to deal with in the markets. Nothing works all the time, and anything that is working right now will not necessarily work tomorrow. The market is dynamic. Okay. It does not look like I'm going to get another short. That's too bad because I took this one. We had a reason to take it. It was the VPOC shifted down. We had a star. And then it was at the location we wanted to. Every reason to take that. Took profits here, took profits here, and then got out of my trade here. It went a little lower, so I could have been a little more aggressive with the runners. I'm okay not taking that when I'm bearish, but I kind of wish I would have taken this, but I didn't have a signal until here, and this felt a little bit too late, but I could have sold it on the pullback, and I was here for that, and thought about it, but didn't do it. Because those pullback sells and buys can be really good if you do it right. You can risk pretty small, and when you're right, have a pretty good payday. Because if you think about it, let's say I got long on this pullback, on this bar here, right? So I see the star, and it starts to pull back into the range of that star's wick, and so I get long right there, my stop can go above the star. So even if I get like, let's say I don't quite execute it that high, and instead I get it at like 33 $25, let's say, just to make the math easier. You're talking a 10-point stop, right? And like already, like, I mean, that's almost 30 points. That's 3-1 on something that shows up regularly. Like, that's money right there. But only if you take it. Only if you execute it. And yeah, this one technically wasn't aggressive. It was a buy signal. I just skipped it because I was bearish. And I didn't think we could really get through this midpoint. I thought there was a relatively good chance that we were going to come back up here and then reject lower. Yeah. Even though we did get through this, yeah, I wasn't sure about the purple bar on an up bar that's green. I didn't have any reason to think that that was going to be extra bullish. So I didn't buy it. But it's unusual. Usually these purple backgrounds show up on bearish bars. So I didn't really know what to think about it when it actually triggered long when momentum was supposedly shifting lower. It didn't make much sense to me, so I just waited. Sorry, my cat is really playful at night because he's young. So his toy is kind of noisy. I'm sorry. He'll probably start talking too. So if you hear frantic meowing, he's fine. He's just chasing something. He usually brings it over here too. Tries to get me to throw it. What time is it? Okay, well, we're well into London now. I was hoping maybe we'd get a little bit of speed into this session since we had the bonds close on Columbus Day. I thought maybe once London came back up that we might actually get expanding moves in speed, but if it's too slow, I'm just gonna fall asleep. I'll be honest. And then I won't be able to trade tomorrow, which would suck. So we'll see. Like I said, one of the reasons I didn't take this is just because I was not as alert as I should be. So when I miss trades like that like set up pretty obviously, like, it's probably a sign that I'm not in optimal condition to take more trades, especially when I'm up on the day and it's just like, there's nothing wrong with calling it a win. But I'd like to see if it sets up. But the problem here is now we're basically consolidating. See, we come down here, we peaked up above this, and now it looks like we're going to make a higher high. So we might be doing something like, I don't know, we might be spending time in here. And that makes sense considering that we had the pink outline and the purple outline that both got beat. That usually does create some balance. Like, everybody agrees that the price shouldn't be here, but it can't get out. It's like they're shifting momentum up at the highs and down at the lows, so it just gets stuck here. You are so loud, Ronan. Not like I could sleep anyway with him running back and forth in the hallway. Hi. You want me to throw it? Bring it here. Bring it here, I'll throw it. Oh, now you're scared because I'm talking to you. Okay. You finally started ignoring me. I should have just left him alone. Go get it. Yeah, he literally plays fetch. He will bring it back. Yeah, welcome back. Go get it. Oh, now we won't. Okay. Very few cats I know will play fetch, but this one will. But yeah, you can see how we're developing most of the volume inside of the channel. And the channel has gotten relatively flat I mean, I know it's curving down here and it curved up here, but it's like, it's kind of like sine wave undulation, right? It's probably balanced. So most of our trades should be out entering outside of the channel, heading back through it, heading back through it. That's bread and butter, right? This one is a little bit aggressive, but it was outside the channel heading back in. And the one we took, whoops, was this. Out of the channel, heading back in. I traded it through the channel and exited here, which is basically my primary target. So the other end of the channel during balance. Yeah. Yeah, no, I know, Ed. That's like how most cats are like, you seriously think I'm gonna run and get that? Like, why didn't you just give it to me? Like, I've never known a cat that like I throw the toy and he literally runs after it. Not only that, but brings it back for more. Like I don't know. Like I said, he's Sphinx are just different animals. They are cats for sure, but they're not like most cats. They also have a thing about buttons on shirts. They they must believe that they don't belong there because they will pick at them with their teeth and their fingers constantly. So if you wear like a button down shirt, like it's dead. Like he'll sit on your lap and just play with the buttons, pulling on them constantly. Like he is sure they do not belong there and they belong in his mouth. I don't know. I don't know any other cats that do that either. But like I said, Yoda did. The other Sphinx I knew did the same exact thing. So apparently it's just a Sphinx thing. Most people would find it annoying. I think it's kind of adorable. You just have to remember to change out of your button-up shirt. So again, purple underneath the channel, potential for a reversal if they trigger it back up again. This guy had high volume, so if they hold this with another green bar or a star, it's technically a long. Not super thrilled taking it just because of where we are on the candlestick chart. Like, that's just not very bullish. I don't think I have to explain that, hopefully, but it's okay to take it bullish. Doesn't mean it won't work. You can trade in a range, right? But you'd be getting long here, and you have to think, what are my chances of getting the market to come all the way up, back up here, and who's trapped? Well, in this case, in my opinion, these guys are trapped. So I don't think it's going to go back up there every time. Sometimes it does. But I think especially this guy is in big trouble, potentially. We'll see, though. We'll see. It does look like they're trying to shift volume higher. You can see VPOC just shifted up. But I don't know if they'll actually trade higher now, but they are trying to buy it up. I'd actually like it better if it traded under this line first and then ripped higher. That's better. Still kind of sketchy, and since it's so bearish on that time frame, like 30-minute and above looks like death. So yeah, it's risky to buy it, but I mean, if it actually sets up, it'll technically work more often than it won't. But if you're gonna skip one, skip it to the long side for now. You know, just like for so long, skipping the shorts made a lot of sense. Well, now skipping the longs makes a lot of sense. And like even if we're like even if this is the low down here, even if this is the low, keep in mind like at 10,850 or whatever, like that's that's another 50 points, right? Like from a day trader's point of view, like that's another $100,000 per contract for a mini on NQ. Like, that's, yeah. Even if that's the low, like, that's okay. I'm certainly not going to risk $1,000 to buy it here, hoping that's the low, right? But like, if I got another opportunity to sell into that low, would I do it? Totally. It would just need to set up on a pullback because I'm definitely not going to sell down here. Not because it can't go lower, but just because it's too hard to manage risk doing it that way. So what I really want it to do is to right away come back up, set up short, break this, and then give a long. So I'll get a short and then a long. That's what I'd like. I don't know if it'll happen. But it's more likely to actually get back to the top of the channel if it first breaks this low. That makes it more likely that it has some energy to come back up. I just don't know if it can do it. If it tries to turn right now, the short will probably be better. The short that sets up, I mean, in the near future will probably be better than the long is. It looks like they're going to do it. I don't know if they'll get a star though. It's going to be close. There's no star there currently. It won't be a speed drop because the volume on the purple bar is too low. Best case scenario is a star. It's not. They're not shifting volume higher. Volume went lower and then price is going higher. So the only thing you can hope. Oh, it did get a star. Oh, and a high volume diamond. Okay. That's technically a long. I'm not gonna take it because I'm bearish. But it's technically it's an aggressive long. It's purple bar star. It works a lot. It's just going the wrong direction. And if you did take it, what you do is you put your stop down here and you enter anywhere in the bar, depending on how much risk you want to take. It will often come back and test underneath the channel. So you could get a pretty good risk reward on it. The problem is that this low has liquidity under it. So if there's any sellers in the market, it's going to get down there. So I'm not going to buy it, but I know people who would. But yeah, I agree, Ed. It does get expensive trying to guess when the low is going to be. You can't, in my opinion, you can't have a 50-point stop on NQ. It's like trying to trade ES with like a 10-point stop. Like, it's nuts. There are ways to do it, but you don't do it with minis. Even with micros, it's like there's probably a better product for that. Maybe one that you can hold overnight, for instance. Oh, the shirt buttons. Yeah, no, it is expensive. I just don't let him sit on my lap if I'm trading. If I've got a button down shirt, he just doesn't. He's not allowed to sit on my lap because he will literally pull them off. And his teeth are sharp, and like sometimes he'll like try to bite the button and like grab some skin too, and it's just like he's not trying to be mean. He's just distracted by the fact that the buttons don't belong on the shirt for some reason. Wow, look at those sellers. Yeah, star up, star down, and diamond up, star down. This will probably be a pivot in the future. That's what that means. There's aggressive buyers followed by aggressive sellers. So if we can get a move out of here, then they're probably going to hold that as a new resistance. It could go the other way technically, but it usually doesn't. But that star up, star down is like two aggressive traders on opposite sides of the market fighting over this level. So basically, they're either going to chop it around in here, and then whoever like wins the battle will get the next rotation. Otherwise, they're going to push it one way, come back, tag the pivot, and then turn around. It's usually one or the other. Chop or break out, come back, offer an entry, and then go together and then turn around. But I've also seen it go do 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 for like an hour. I've seen that too. And if it does that, I'm gonna fall asleep. So what I'd like is for it just to pick a direction so that when it comes back, it can offer an entry. That's preferable. But remember, this third star only shows up if they trade lower. And that would certainly give sellers an edge here. For sure. But again, we've got this high volume bar over here. They're trying to defend it. They know that if they take this low, it's like another cascade lower. So I don't think buyers have any chance of actually pulling this off. I think it's going to go. But I'm not allowed to short because I think it's going to go down. It's against the rules. I need an entry that has objective data that I can go back and say, here's why I entered right here. Oh, don't get choppy. Like, failing to get out of this range is not a good sign for trade for me as a trader. Like, it's a sign that I'm done for the night, basically. If they can't expand out of here, it's like useless to sit here and watch this. I'm much better off sleeping then. Because once the regular trading hours opens, it'll open up a bit, better. But like if they can't even close a bar in like 10 minutes in this pivot, like yeah, it's probably done for a while. And that does make sense, right? Because we traded on both sides of the pivot after a big open higher. Like negotiating in this area before they roll it over makes a lot of sense. But this is slower than it was in Asia. Look at how like the pace is just like ground to a halt. Like everybody's just gone apparently. Okay, we'll give it a few more minutes. We're 10 to the hour, so let's give it like 10 minutes. Let's see if maybe the algos fire into the end of the hour. Maybe they'll push it. Otherwise, I'm just gonna go to bed. At least get a little sleep before they open. Because this isn't worth watching. That's the problem. Like if they're not gonna move it, I'm not making anything and I'm not learning anything, and I'm just missing out on sleep. But every once in a while, at like the 5 or 10 to the hour, you'll just get like a massive flow of order flow because the time-based algos get triggered. So it's usually at like 10 to the hour, 5 to the hour, 3 to the hour. Like right as the clock ticks, you'll see like all these orders come in suddenly. Hi, Ronan. Welcome back. Are you done playing now? Is it sleepy time? Yeah, I thought so. Oh my goodness. You're supposed to be petting me. Alright, they got the second star. I mean, it's going to be really hard for buyers to take this now. They've got stacked stars to the downside. But again, why aren't they taking it, Like where's the follow through? Yeah, they're just going to chop this up. Disappointing. That's okay. At least I'm positive I got one good trade, executed it okay. And we learned some things. I was able to take some lines off the chart. That's always good. And I think it definitely confirms that these shaded areas are the background colored areas are useful for sure. Wow, now star up. Wouldn't that be interesting? Star up, star down, pink bar, star up. That would be, yeah. Looks like chop is what it looks like. Like everybody's getting involved here, and no one knows what to do. What time is it? 2 after. We'll give it till 55. We'll see if anything happens. I'm calling it. I have to assume they're trying to make it go lower, but what I don't understand is why they wouldn't. This bar should close lower. They got all these aggressive sellers in here, and then they just gave up for a bar. It should just fall here. But like the fact that it's not just happening immediately is making me anxious. It's like, wait, why aren't you selling it, everyone? Like, isn't there liquidity right here? Don't you want this liquidity? And it's just taking them a while because of the time of day, I guess. There we go. So like I'm not gonna sell the breakout here, but it is bearish. Now let's see if buyers just suddenly show up now that they got onto that low. Are they suddenly interested in it? I would not be surprised. This is the better buy if they do trigger here with a green bar or a star up here. It's a way better buy than this one. Way better. This is like the first buy I'd consider. I still don't like it, but if I was looking for a reason to buy, that's what you want. Is for this bar to close up here right now and be colored green or have a star on it. And you kind of want it to happen fast, like to sort of suddenly fill, like where it's like hard to get long. Like you want to see like some FOMO with like sellers getting scared basically. And I really want to see that VPOC shift up, and it's not. Okay, there's that arrow. Oh, but it's not going to stick around. It's got to be a closed bar. Interesting. So there's some buyer in there that it looks like he got filled though. Now it's gone. Oh, it's back. He's right there. Interesting. Interesting. What is he doing? Is it? It's right at 80. I wonder if it's just triggering because there's so little activity. And so it looks like it's a much bigger buyer, but it's actually just normal. Let's see. I mean, it doesn't count unless it closes the bar anyway, but it looks like if they hold 80 here, that arrow's going to show up. So does the buyer at 80 hang around or not? Yeah, see, that's what you want. That big push right there, that's what you want. Let's see if it gets a star. That would be technically an entry. But like I said, I've seen these arrows work all by themselves, but usually only when you're trading in that direction on the higher time frame. And in this case, we are not. So it'd be interesting to see if it works, if it prints. First, it's got to get to 91, though. If it can't hold 80, it's done. Yeah, that's not looking good. See, like you should see that, like when they push like that, you should see sellers exiting if they're gonna get scared out of their trade and you're gonna squeeze up. You should be seeing sellers quickly exiting here, and this bar should be filling really fast. Like there is a buyer at 82, and they don't seem to, or at 80, and they don't seem to care. Like sellers are just like, whatever, we'll just take you out. We don't care if you keep adding to your order. That's not bullish. And that's why you don't do anything to the bar closes, because the arrow by itself is totally meaningless until you get that bar to close. Oh, are they going to do it? Turtle speed, but they're trying. They're absorbing the buyers. Look at that. There's another reloader on the selling side. These are small orders, though. It's not huge. Like, someone just needs to give up, basically. And I'm guessing it's me buyers, but I don't know. Yeah. Look at that. Oh. Yeah, he's still on 80 now? Okay. Yeah, the longer this takes, the less I trust the buyers. Once it gets under 80, watch it flush. I'd be shocked if they test under 80 and it doesn't close bearish. Shocked. If I had to guess, most of these buyers are very short term. They're just trying to take advantage of that guy, that reloader. It's not a bad strategy. It's fine. It's just they're not going to support the market. If it takes him out, they're done. But you can see this big delta down here came in. And like those should be relatively easy to trap if it's bullish. If you're gonna get a bounce, when you get this like anomaly here with this big old delta, like it shouldn't go back there. That's what you'd expect. But it should go like right up to this next one, like right to this VPOC is what you'd expect. But the fact that we're so like we're so slow, like buyers have no there's no follow through. Even though they were getting aggressive down here, and I'm pretty sure it'll close the star, but I'm not sure. I don't know. It's hard to tell how aggressive they were down there. No star, just a high volume mark, and then the green outline. Again, we saw the same basic thing up here with the red outline and the yellow arrow. This is a green outline with a blue arrow. Now this high volume one might be okay to buy because we've already gotten high volume here before. We tested below it and came back up for the high volume. It's not a bad, it's a valid entry, right? I'm just not bullish, and I don't see the risk reward being worth it here, especially when this guy got beat. So I'm not going to buy it, but it is technically a valid signal. I'm not saying like I can take credit for it when it works. You obviously have to be confident enough to take the signals, otherwise it doesn't matter. But it is, if you see something different and you were looking for this like opportunity to buy for short term bounce, this is basically the best one we've seen. Let's put it that way. It's just not good enough for me. I'm just too conservative, right? I'm not going to fight the trend down here. I will let somebody else be aggressive, and when they're right, I'll take the next one. You know, like I said, especially when I'm up on the day, and it's late and I'm tired. Like, it would feel really bad to give away a stop here when I did everything right for like 2 hours. It's not very good behavior psychology wise. It's really bad to end your day red, or even like give away a lot of your profits when you had a really good a good decision making day. You don't want that day really to end poorly. You want to reward yourself for doing the good things. So in some ways that means if this trade works, I'm probably biased and I shouldn't trade for the next couple hours. I probably should go to bed, right? Because if it works well, and I was too like biased to take it, and I didn't, then it probably means I'm not in optimal condition to continue trading. And it's like it's not anything negative. Like you don't have to beat yourself up over it. It's just an indication that yeah, like you took a side and that side was not correct and you missed a trade, and so like why sit here if you're not reading it right? You don't have to quit, but it's probably a good time to, if you were looking for a reason to quit, which I have been, it's a pretty good reason to pack it up. But when I say work, I mean if it gets like to resistance, right? To be fair, it would have hit my 10-point target. I would have gotten some risk off, I think. In at 91.25, yeah. I'd be out of 3 out of the 8 if I would have taken the trade. And I'd be looking to cover another 3 if they close this one, and then I'd leave the runners for the rest. But like I said, I just wasn't confident enough that longs are going to work yet. It did set up. It was valid. The algo said buy it. So, like I said, me not doing that, me not taking the trade when the algo says to take the trade is evidence that I'm biased, and that's okay as long as that bias is right. But when you do that and your bias is wrong, you are at risk of I am at risk of tilting, and it's probably a sign that I'm either distracted, tired, or like just not in the best condition to trade. And like, why put money on the line when like I can sleep for 4 hours and come back and just do better? Especially when I'm up on the day and I've been doing well. It's like, yeah, let's not let a missed trade affect me. Get down. You don't. Oh, this cat is trying to climb the TV. Like I've got one of those. It's mounted with one of the ones that like comes out from the wall, and apparently he sees the little metal, I don't even know what we call it, but the mount as like a climbing tree. Apparently it looks like a climbing tree to him. I hope you haven't been doing that while I'm at work, dude. That's not a good idea. If I come back and see my TV on the floor, I will not be happy. That is not a place for cats. I should probably scare you away, actually. Get down. This is not where you go. I shouldn't even let you have fun over there, because you're just going to go back. I know you. No, you are so naughty. Go. He's literally like a 3-year-old. It's like, tell them not to do something, and they're like, ooh, why can't I do that? So it would make sense if it rejects here at the midpoint. That makes a lot of sense to me. What wouldn't make sense is if they ripped it past this and continued higher. But we'll see. It is kind of nice to see that the algo had this is what it expected, is at least a 10-point move, right? The algo is only looking at the footprint on like the very recent past, like back like this. It's not aware that like we're bearish for the last X days or whatever. Like it's not that complicated, right? It's not that convoluted. It's just like, here's an opportunity to get 10 points. If you think you can get 30, maybe consider buying, right? And so it was technically right, but if it turns around here, then I was right too. Then I didn't want to risk 15 points. Oh, there's a short actually. It's not perfect. It's not perfect. There's no momentum. And this is high volume, so. It's just been so slow. What it's probably going to do is chop, you guys. It's probably going to chop. But that, again, valid entry. But I think it's just going to chop in here. These high volume candles, the diamonds up here, is like unusually high volume. And getting so many in this same area is not what you want to see if you want the market to move a lot. It's what it usually means that the market's stuck here. Like you see that like at the developing POC. And we're gonna need the market to move away from this area and then maybe come back and set up here again later. Yeah, it's just gonna get stuck. That's unfortunate. And now it really not take out that low. It got under 80. You would think we had that big buyer there. It does not. Well, maybe they're going to support it. Cat, no, don't do it. I see you eyeing the TV. You cannot climb the TV. No. Okay, good. No entry signal there. Get out. No. You are so naughty. Get over here. You can't climb that. Go. It's a horrible thing to climb. Thankfully it is mounted into a stud, but yeah. TV mounts are not meant for cats, as far as I know. And he's gone. He's probably going to go to the other TV. He's like, I'll just go to the living room. It's cool. Knowing this cat, I would not be surprised if that's where he's headed. Wow. They bounced it without an additional signal. That's interesting. No, I mean, they just supported. It's the same exact trade as we saw the last time where this arrow gets defended. See that? That big volume guy gets defended here, and you get another chance to get in. And they could do that repeatedly. I've seen it before. It's the same exact signal as this. Same exact thing. Where you got somebody selling, and they come back in and they start campaigning there, and then basically anyone in here selling aggressively can be followed. Even if it doesn't have another arrow. So this guy, it might be an entry. Like I don't take that trade, but maybe I should. Because that is not the first time I've seen that work. But I mean, technically you could do 10 points as a scalp and get out at the midpoint. And then as soon as you see a bullish bar that shares space with this bar, you'd get in for another 10-point scalp. I mean, it's not a horrible way to make money. I'd prefer to do it at the other direction, but yeah, I guess what that tells me is it's not super bearish, because it's probably balanced, because we shouldn't see those high volume buyers get defended if sellers are really active. It suggests either that inventory is way too short, so they're like not able to like add to their selling, right? Or that it's just not that bearish down here. That there's still buyers waiting to get filled underneath, and so we're not able to push down in there. That's interesting. Let me just look here. Yeah, see They may just be balancing this whole area. I I expected range expansion, and I got it. They traded underneath this, put in a little bit of excess, tested the voodoo range. But then when they got stuck here, I assume this is bearish, and it usually is. But yeah, that little sequence suggests that somebody's interested in this level, and it also suggests that shorts are or sellers have backed off quite a bit because they were really active up here and at this higher lower high, and then they're giving up down here at a higher and higher level. I don't know. We might actually open a little bit higher. Interesting. Well, you know what? I mean, honestly, that probably means I should get some sleep because it means that I might get a better trading day tomorrow than I expected. Because if we can, the hardest thing for me to trade is straight down. It's really tough for me to trade. I don't commit to it, and then I think I missed it. I don't chase it all day, but it's like it's just hard to catch, like especially when it's slow, right? Days like this. This is fast, but if you don't catch this, you just miss it. But this stuff here, this is really tough for me to take, and I'll just end up like second guessing myself because it's like, oh, maybe it's gonna bounce, and then it doesn't. And it's like, oh, maybe I shouldn't be shorting, and then it goes lower. Like I won't buy it, but it just looks so sketchy, and so that might be what they're doing here, is just like very slowly chopping up the buyers. That might be what happens. But what I'd prefer, oops, that's the wrong one. Haven't they done this the last 2 days? Yeah, that's right. They have done this the last 2 or 3 days. Drive it up at the Globex, trap people at the highs, and then dump it at RTH open. That is exactly what they've been doing. So, good point. That might be exactly what's happening. But what I was going to say is that what I really like is when they do this, and then you get to sell all day at that level in a balance. That's preferable for me. Like this trading is great. Like Friday, like Monday afternoon, I'll take this every day if I can. Or the exact opposite, this. Like I'll do this all day. Buy the level, buy below it, right? But like catching this guy is tricky, and then I never know what to do here. And so I'll miss this one. And then you have to like flip. You know, it's tricky. It's obviously it's not as easy as it looks in real time. Like getting the feel for like when is this no longer bearish, when it's slowly grinding down. But yeah, what you really want is sell the you're right, Ed. Sell the RTH open and just hold it all day long. That's what you want. But if you don't trade the open, it can be like I'll get a piece of it, and then I'll have a really hard time getting back in. You know, because it's like so slow and choppy. But if I can get it to do this, all good. Like I just need a range to work in, and I can make money there. But if it does this, like I will maybe short this once and then be like, yeah, it's probably going to bounce. I'll just wait for it. It's just like clunk, thunk, thunk, thunk. And I'm like, well, I guess that's the whole day. But what you really wanted to do, like you said, is to catch the rip and just hold the short the whole damn day. Exactly like we used to do with the grind up, trend day up for years. And like, that was hard at first, but eventually you just knew to expect it and you just did it. You just bought it. You just held it, right? Like hold runners and see what happens. And it's literally just the opposite of that. It's like all the buyers come in right away hoping it's the low of the week is in, and then they all get trapped, and all day long they try to buy the dip and fail. So like the worst thing you can do is buy the dip with them, but really the best way to trade that is to just stay short. And yeah, for someone who has done so well on the long side and done okay on the short side, as long as I'm not greedy and I'm quick and nimble, it's really hard to hold short all day. Really tough for me. Unless it's going fast, then it's easy. But if it's grind down, oh my god, it's I just I'm like traumatized by all the times in like 2020 where like you try to do that and just get absolutely face ripped. Like in an hour, it would like retrace the entire day. It was just like stupid price action, low liquidity. Like Powell would come out and save the market all of a sudden, and like Trump would tweet, and you would just suddenly like go up 100 points. It's like, what the fuck? And yeah, so like that's just traumatized me, and it's hard for me to stay short. Like I just want to get in, get out, be done when I'm short, and when I'm long, it's like this could go higher, but it doesn't anymore. So it's yeah, you just have to be flexible and not really have those expectations, not let that stuff traumatize you, and just trade what you have, which is a grind down market. So you really the best way to do it. Ed's right. You sell the open after it rips higher and you just hold it, accepting that worst case scenario is just going to come back at you and you stop out just like you would have had you gotten in and it stopped out right away. Like that's worst case scenario, but it's difficult for me to like shift into that and not be like, oh my god, I've gotten 50 points, I should really get out. It could come out, they could give it all back anytime now. But like, yeah, I don't think anyone's coming to save this market. I mean, they might, but there's been no evidence that that's going to happen. And when they try, they fail. So, like, you can get out when they start showing up and squeezing, but like, you basically just want to short it again as soon as they start to sell it. Which is, like I said, the exact opposite of what we saw for like the second half of 2020 and most of 2021 and the 4 years before that or whatever. Like it was, they try to sell it, sellers run out of gas, and it grinds up all day long. I don't know why it feels so much harder to the downside, but for some reason it is. And like I said, it's in my head. It's not actually harder, but in my head, it's like it feels like psychologically more difficult. But it's all in my head. It's a matter of just not trusting the sellers to continue to press lows because they've been doing it for so many days. You know. Okay. Come on, sit up here. You're yeah. Come on. Cat says it's bedtime. It probably is. Yeah. They're just gonna chop this up. I'm not gonna be confident to get in a trade. I think I'm gonna stop it here, you guys. I will be. I'll do another one next couple days probably. I don't think I'll have time to do it tomorrow, or Tuesday. But I might get a chance to stream at like lunch hour maybe on Wednesday or Thursday. Otherwise, I'll try to do another Globex. I find these really like good. I actually review these and see if I have any logic flaws and take notes on some of the stuff I see so that I can go back and test the ideas. And it's always nice to talk through what I'm thinking anyway if I'd be sitting here. But I hope you guys get something out of it too. Yeah, I don't blame her, Ed. It's late. And like I said, it's just pace has slowed down so much that I'm honestly anxious about getting into a trade and getting stuck in a trade that's not going anywhere. So I just don't have the after working a 13 hour day, feels like a 13 day, but a 13-hour day. I don't have the stamina to like stick with it. So I'm gonna try to get some sleep. I'll be back in the trade and perform room tomorrow, and hopefully at open or a little after that. And then I will see all of you guys as soon as I have some time to trade on my own. And certainly if I come up with some new ideas, I'll let you know. Let me know in the comments or whatever this is helpful. Always appreciate the likes on Twitter. And thank you guys for watching. I hope you guys enjoyed.